What's going on, guys? It's Andy here. Welcome back to another episode on the Andy Kandola Show. In this video, I want to go ahead and share with you guys the 10 stocks that I'm basically buying while the market is correcting. Now, in the recent days, the market was down, and just in this last week, guys, the market actually climbed right back up. We did hit 33,000 in the Dow. The S&P, for the first time ever, crossed 4,000, and the Nasdaq is starting to go ahead and climb right back up. In this video, I want to go ahead and share with you guys the 10 stocks I'm very bullish on that I'm going to just keep on buying. Even if the market goes ahead and goes down, then I might actually end up buying a little bit more, but at the same time, I'm just going to dollar cost average into all 10 of these stocks pretty heavily throughout this year. So these are the 10 stocks that I'm very, very bullish on. Now, as I like to go ahead and do in every single video, I want to go ahead and keep you guys updated with this bucket list portfolio. The portfolio is currently divided up 50% into growth stocks and then 50% into passive income or dividend-based stocks. Currently, guys, the portfolio is doing really well. I'm pretty excited to say that this is actually the highest this portfolio has ever been at, and we are currently sitting at a value of $108,000, or no, that's not correct, $108,402. In the last day, the portfolio is up $1,375 or 1.29%. In the last week, we are up $4,397 or about 4%, and I have earned pretty nice dividends. I've earned about $73 in dividends just in the last week. So the portfolio is doing exactly what I was hoping that it would do. In the last month, we're still down $4,823 or about 4.40%. In the last quarter, we're still down $6,825 or about 6%. And then in the last 1 year, we are all-time up now, $8,043 or 14%. And then if we just look at since I started this portfolio, it's going to be the same, and we're up $8,043 as well. So the nice thing is overall the portfolio is up. We are starting to go ahead and climb out of the losses because the stock market and a lot of these growth stocks that I started investing in were down, but they're slowly starting to go ahead and climb right back up. Now, as we go ahead and go into these stocks, a lot of these stocks are going to be growth stocks. So these are going to be more focused on my growth strategy in this portfolio. The goal with this portfolio is to get it to $250,000 before the end of this year. We'll see if it happens. I am dollar cost averaging into this portfolio every single week. I tend to invest $200 to $1,000 every single week out of my paycheck or out of my savings. So I'm going to keep you guys posted throughout this journey. We'll see if we hit that number, but that is definitely my aggressive goal for the remainder of this year. But now, guys, jumping into the first stock. The first stock that I'm going to be buying pretty heavily is going to be Palantir. Now, Palantir is actually a brand new investment that I added in my portfolio. But here's the thing, I actually did not add this in my M1 Finance portfolio. I added it in my Robinhood portfolio. But I do like Palantir. Palantir is currently trading at about $23. They're down from hitting their all-time highs. At one point, the stock was at about $38. This is a stock I'm actually pretty bullish on because Palantir is hunting for the biggest whales out there. With this company, guys, they've really figured out how to help companies grow their revenues and cut their operating cost. With Palantir, this company has large contracts with the government, plus they're looking for the biggest whales out there in the private sector to help them create softwares, create a system where these companies can go ahead and benefit from these systems by collecting all this data and basically simplifying this data to show companies how they can cut their operating cost or streamlining some of their services. Now, in my portfolio, like I said, I have this in my Robinhood portfolio. As far as Palantir goes, my actual cost is actually a little bit higher, so I am losing money on this stock. My average cost is about $24 a share. So my overall cost in this is $2,404. My current value in the stock is $2,295. I have about 100 shares at this point. So my total return, I'm actually down $109 or about 4.54%. Now the goal was to go ahead and get to 100 shares with this company. Eventually I might go ahead and move this over to my M1 Finance portfolio, but because I already had a small position in Robinhood with Palantir, I didn't want to sell out of it. I just went ahead and added on to it. So this is a stock that I'm very bullish on that I'm just going to keep on investing in. Now jumping into the second stock, the second stock is actually going to be C Limited. Now C Limited is actually diversified in a bunch of different ways. They actually have 3 companies within this one company. I do like C Limited because all the different companies that they have are really innovative companies. So if we go ahead and check this out here, as far as the 3 different companies that they have is they own Garena, which is a digital entertainment company. They own Shopee, which is an e-commerce company, and this is actually a big competitor for Amazon overseas. And then the newest one that they have is called C-Money, which is basically kind of like PayPal or Spotify, where they're in the digital financial services space. So this company has multiple different ways that they're actually looking to go ahead and grow. So I do like the potential growth for this company because they're focused on all the industries that are making the majority of the money right now or that are growing. So as far as C Limited goes, they're up 5.92% or $13 just in the last day. Overall, in the last 1 year, guys, this company is up about 447%. And if we go ahead and look at my portfolio, as far as this stock goes, it's in my growth portfolio with M1 Finance. I have a current value of $1,506. I'm overall about break even or up about $13 at this point. So this is going to be the second stock. Now jumping into the third one. The third one is going to be in a similar space, and that's going to be with Roblox. Now Roblox is a brand new company that I added to my portfolio when their IPO came out. This company actually just had their IPO in just the last month. And I do like where this company is headed. They're basically focused on growing by creating a platform that people can go ahead and entertain themselves and play video games. Plus, because this is a content creator type of platform, the users are the ones that are actually making the games. So to me, I look at it like YouTube, where the more people that are creating content, the more people it's adding onto its platform. So currently, guys, Roblox is trading at $67. At one point, this company was trading at right around $77. So I've been dollar cost averaging into this company as well. If we go ahead and look at my portfolio, I am down currently in this company, but my current value is sitting at $2,984. I'm down about 8% or $213. Again, another position that I'm planning to hold on to long term for the next 5 to 10 years. And in my case, I mean, I just don't see how this company will not go ahead and grow, because this is a platform, once they go ahead and get more users that are on their platform creating content, it's just going to go ahead and drive more people that are going to want to go ahead and play even more games or just to be entertained, because this company is focused on creating even more lines of entertainment. So this is going to be the next stock. Now jumping into the next stock, the next one here is going to be in the insurance industry, and that's going to be with Lemonade. Now with Lemonade, they're really focused around different products in the insurance industry, and they're focused around trying to disrupt the insurance industry. So I do like where this company is headed. Unfortunately, the company did go ahead and take a little bit of a hit here. I did start investing in this company in the last couple months, so I am down a little bit. But currently, guys, Lemonade's trading at $95. I do believe this is a pretty attractive price. Anything under $100, I do believe is a good price long-term if you're a long-term investor in this company. But as far as Lemonade goes, they're really focused on multiple different products in the insurance industry. They are focused on renters insurance, homeowners insurance. They did recently go ahead and add term life insurance and as well as pet insurance. And the rumor has it that Lemonade is working on something very big, and I believe this company is going to go ahead and get into auto insurance. The reason why I really like Lemonade though is because they have algorithms in the background, and they're using a computer software platform to go ahead and change the price of their insurance, and they're able to go ahead and change that price much quicker than a lot of the big companies out there. So they're able to go ahead and adjust that price 20 to 30 times within one day, where normally in the insurance industry, it takes months just to go ahead and change the price or just to go ahead and make one adjustment to the price. So this company is moving at a lot faster pace than their competitors. Now, I started buying this company probably when it was at its all-time highs. So currently I am down, but my current value is sitting at $2,656. I'm down about 45% or about $1,232. My goal is to go ahead and keep dollar cost averaging into this company to get back to break even. But if I just go ahead and look at holding on to this company for 5+ years, I see this company 5 to 10x from here. So this is going to be the next one. Now, jumping into the next company, it is going to be Apple. Now, Apple, is cream of the crop when it comes down to their ecosystem. I'm a huge fan of this company. I own multiple different Apple products, and there's rumors that Apple might be coming out with an Apple car. In the last 1 year, guys, Apple's up 104%, and they're currently trading at $123. Now, I do believe that Apple's just going to keep on growing. I do see this company in the next maybe 2 years go above $200. I mean, that might be a little conservative even for this company. This company is just the cream of the crops when it comes down to their ecosystem. Once they suck you in with one product, as long as they're rolling out new products, they're just printing money. So, huge believer in Apple. This is actually one of my larger positions in my portfolio. The current value in Apple is sitting at $14,775. I'm up about 37% or $2,221. Now, the nice thing with Apple is I have market gains and I have dividends that this company's paid me out. This company actually started paying out dividends about 7 years ago, and they've been consistently growing their dividends. So I like that, because if I'm planning to hold on to this for the next 10 to 20 years, hey, I want those dividends to also go ahead and grow for me. So, huge believer in this company. Now, let's go ahead and jump into the sixth company. The sixth one here is going to be Square. Now, Square is trying to go ahead and disrupt the financial sector. Basically, with Square, guys, they recently introduced that they are going to be offering bank products like standard banks, like JP Morgan's and the Bank of America's and the Wells Fargo's, where Square was currently focused on payment platforms, but now they're getting into digital wallets with cryptocurrency, plus they're getting into the traditional bank products as well. Square's currently trading at $229 a share, but in the last 1 year, this company has just been skyrocketing. I mean, they're up 390%, which is huge. Now, as far as my portfolio goes, I'm about break even in this company. My current value is sitting at $2,110, or I'm down about $31 or about 2%. But now let's go ahead and jump into the next one. The seventh stock is gonna be Netflix. Now, here's the thing with Netflix, they are the cream of the crop when it comes down to streaming services. Netflix did announce that they are gonna be releasing a new show or new movie every single week for the rest of this year. Now, there's a lot of competition that's coming into the streaming service, but Netflix is the cream of the crop. I do believe that Disney and some of the other companies out there are gonna grow, but at the same time, I think Netflix is gonna grow even faster. I personally really like this company. This is a company that I'm heavily investing into. As far as my current value goes, I have a current value of $1,937. My total gains, I'm up about $11 or roughly around 1%. So this is a stock that I'm very bullish on for the next 5 to 10 years. I do believe this company is just gonna keep on taking the majority of the shares. To me, I believe Netflix is going to be number one, and then Disney Plus will be the number 2 player, and then we'll have a lot of other players underneath that. But this company is really just focused on content. They're focused on what they've already been able to do and just growing that consistently. So I like this company. I like where this company is really headed. So this is going to be the next one, guys, that I'm going to be investing pretty heavily into. Now, jumping into the eighth one. The eighth one is going to be Peloton. Now, Peloton's currently trading at $112 a share. This company is another one that's up over 300% in the last 1 year. They have been trading sideways for, I would say, probably the last 6 months here. So they're only up about 6% in the last 6 months. But with Peloton bringing their treadmill and their bike to a lot more people's homes with the pandemic, I believe this just gave this company a boost, and this company is just going to keep on consistently growing from there. With Peloton, I am currently down in the stock, but I'm going to keep on dollar cost averaging into this one as well. My current value is sitting at $4,624. Overall, my losses in this company, I'm down about $682 or about 20%. But I'm very bullish on this company when I look at the growth potential this has in the next 5 to 10 years. Now, jumping into the ninth one. The ninth one is going to be a new position in my portfolio that I added to recently because this company just came out with their IPO, and that's going to be Airbnb. Now, Airbnb is another company that just had their IPO. I believe it was about 2 months ago, and I did buy this company at their IPO. Now, I'm about break even. I might be actually a little up on this company at this point, but currently, guys, this company is trading at $188. In the last month, this company is actually down about 4%. But with this company in my portfolio, I'm actually up about 9.74%, so a little bit more than I expected. My current value is sitting at $3,248, and overall gains up 187%. With Airbnb, as more and more people start traveling, this was my play on the rebound from the coronavirus. And I do believe as more and more people start traveling, the experience that Airbnb provides is second to none. And I've used Airbnb many times when I've traveled in the past, and I love some of the experiences that you can get with them. So I do believe this company is just going to keep getting majority of the share when people go ahead and start traveling. So another one that I'm very bullish on, this is going to be the 9th one. Now guys, finally jumping into the 10th one, and this is a company that I'm actually losing money in, surprisingly, but at the same time, I'm extremely bullish on this company, and this is one of my larger positions, and that's going to be with Tesla. Now, Tesla, for the last 6 months, has been trading sideways. I actually started investing in this company about 2 months ago. So I started investing right when it was around $700 to $800. And I do have this company in my retirement account, but in my active account with M1 Finance, I'm down right now on the stock. This stock is currently trading at $661. The last 6 months, they're up 47%. If we look at the last 1 year, this company's still up 587%. Now, of course, Tesla has so many different ways that they go about making money. I do believe as Tesla focuses on FSD and focuses on the new vehicles that they're starting to roll out, plus with their batteries, this company just has a lot of potential for growth. They're focused on many different areas to go ahead and increase their income. But as far as my current value goes in this company, I have a current value of $16,428. I'm down about 16% or $1,515. I'm not so concerned with losing money in this company in the short term. I'm going to keep on dollar cost averaging into this because I'm very, very bullish as far as what I see as the potential for this company. But guys, these are basically going to be all the different stocks that I have in my portfolio. Overall, I'm very happy that the portfolio is up as a lot of these tech stocks are starting to go ahead and go up, and we're hitting all-time new highs in the bucket list portfolio. I do have some cash sitting on the sidelines. If I do see a dip, I am going to probably go ahead and allocate all my cash that I have sitting in here in the portfolio. I'm waiting for a dip, but at the same time, I am going to just keep on dollar cost averaging as well, because you never know if the market just doesn't go down and it keeps just consistently climbing back up. But thanks again, guys, for watching this video. If you are interested in trading with M1 Finance, personally, I love this platform because it keeps you disciplined. It's a long-term platform for somebody that's looking to basically build their portfolio over time and stay disciplined with investing. So I'll leave a link down in the description where you do get $30. It's currently a limited time offer that they're offering. But thank you again, guys, for watching this video. Hopefully you found some value in this, and I'll leave it at that. I will see you guys at the next one.